Hi, it's Stan Reinford, and welcome to this week's market update. Thank you again for all the great compliments. Really appreciate it. Thank you for all the great feedback on using the 10-year Treasury. Really like that too. So let's jump into it. So to the top here, we have the charts. To the left, we have the 30-year Treasury. We really want that to be green. In the center, we have the 10-year Treasury, and we really want that to be red. And then to the right, we have the S&P 500. So down below, we have our candlesticks. We're looking at the 10-year chart. The higher we are in this chart, the higher rates are. The lower we are, rates are lower. So right now, today, we had green, which means that rates went up just a tad, and we'll get into why. So lots of volatility out there. So, and by the way, you're gonna to come up with an average 30-year rate, you're gonna add about two and a quarter to that number that's right there, and that'll give you the average 30-year fixed rate right now. So let's jump into it. Saga continues in Iran. Today, in fact, there was rhetoric going back and forth. Iran still wants control of the Strait of Hormuz. The U.S. says no, but oil is flowing there. The U.S. also mentioned that they believe that they've cleared out all the mines that are there also in the Strait of Hormuz. So, and the shipping lanes are flowing freely right now. Oil's ranging from $85 to $90 a barrel. Fingers crossed that this is going to end soon, because then hopefully it will relax a lot of different things in the economy. So the Fed released their minutes from the Fed meeting on July 29th. And as you know, there were several dissenters who wanted to increase interest rate or increase the Fed funds rate, which again, they were looking at saying that jobs were doing great and that, inflation still isn't under control, which we all know about inflation, but they're a little off, I think, about jobs. And I'll get to that in a little bit. And what they don't understand is that, yes, if they increase the Fed funds rate, it may help mortgage rates, but it's not going to help the overall economy. It could push up rates and fees in other areas there. Kevin Warsh is also looking at reducing the number of meetings that the Fed has on an annual basis from 8 down to 6. He believes that it's going to give them more time to accumulate the data that they need, and then more time to strategically review it in order to then determine where monetary policies will be moving forward. So the Fed's next meeting is September 16th. There's a 32% chance of a Fed rate hike. So we'll have to wait and see what happens there. And then the other day, Treasury Secretary Dissent announced that they would be using the Treasury's general account, which is very much like a checking account, to then fund bond buybacks, which could essentially help in the interest rate market. It helped for a day or two, and then it kind of vanished. We'll have to wait and see what happens in September when this actually starts as to whether or not any traction will gain for there. ADP released the other day their jobs report, and it was somewhere around 50,000 jobs for the last 4 weeks that were created, a little bit above where it had been, but still generally low. They're also talking about ghost jobs. Ghost jobs are where a job is reported here, but not only reported here, in other states. And what they're doing is counting those sometimes as more than one job where they shouldn't be. It's estimated that 1 in 5 jobs is or 1 in 5 that are reported is a ghost job. So again, we'll have to wait and see what happens there and how they control. It's actually part of Kevin Warsh's task force to look at. PCE came out today, came out a little bit. It is the Fed's favorite measure of inflation. It is personal consumption expenditures. And the biggest culprit there, again, is portfolio management fees. That's the fee that you pay in regards to your investments. As your investments grow, that fee goes up. Does that really mean that's inflationary? Again, Kevin Warsh is looking into that. So interest rates. Yes, interest rates are higher. Again, there's opportunities out there. If you buy today and interest rates are a little bit higher, there might be less activity out there in certain areas. Not every area, because you can't take national news as local news, but it could very well help you that a year from now, when interest rates do go down or whatever that does, there'll be more people coming into the market. So could push prices up, and it could be your equity instead of you paying more down the road for that. Remember, we help clients that are looking at buying or refinancing primary residence, second home, or investment properties, whether it's a renovation loan, cash out refinances, which we're saving people lots and lots of money, home equities, reverse mortgages. We do it all. Please call me if you have a scenario that you'd like to go over, and please forward and share. I look forward to chatting with you next week.